Hi, this is Chris German. Welcome back to the Apartment Dealer Show. I'm here with my partner, Deepan Shah. We just sold this multifamily property behind us for the highest price that's ever sold in this city's history. This video is going to tell you how. Welcome back to the Apartment Dealer Show. My partner Deepan Shah and I just sold this 7-unit multifamily property that's here behind us. It actually sold for the highest price per unit that's ever sold in the city's history. How did that happen? That did not happen by accident. And please keep in mind, we outlay for you the financials on this project. This is actually the third video of a 3-part series, so you may want to go back and watch those initial videos. But we're going to round up the project for you, give you the final overview of what was entailed in this project, and then what were the final financials. That being said, I'm going to have Deepan give you a tour through the property and an overview of what it is exactly we did to the property.
Hello, everyone. My name is Deepan Shah. I'm a part of the Apartment Dealer team. As Chris mentioned, we purchased this property for personal investment. I'll give you a little tour of what we have here. As you can see, the entire property is single-story construction. There's 7 units here. Not like the typical apartment building that you see. We call these single-story cottages. There's a few of them that are detached and a couple duplexes as well that I'll bring you through. As you can see from the outside, as we start here, not only did we renovate the interior of the units, but we also started with the landscaping. On the exterior, including the paint, the windows, new roofing, plumbing, new electrical panels as well, because when we purchased the property, the electrical panels were not up to code. We couldn't get insurance on it. Aside from that, the interiors of the units are completely rehabbed, all the way from the kitchens, the bathrooms, the flooring, new walls, new AC units, everything. Now, these units, as I mentioned, some of them are detached single-story units. Each unit has its own private backyard, as well as a 1-car garage, as you can see here. Plenty of on-site parking for the tenants, over a 35,000 square foot lot. And 6 of the units are 2-bedroom, 1-bath. There's 1 unit in the back that's a 3-bedroom, 1-bath. Now, when we purchased this property, the intent was substantial remodel. So we purchased it and we gave everybody a notice to vacate, and then went in one by one, rehabbed every single unit, and then got market rents. And, when we purchased the property, it wasn't as if we got a great deal. We actually paid market price for it, but given the unique nature of the asset, we knew that there was upside potential, and hence we went through with it.
There you have it. Now, again, I'm going to remind you, you can go back to episodes 1 and 2, where we should get you through the demolition process. We show you the actual finished materials we used and so forth. That outlines that for you. We're going to move on to the financials now, but what I want to reiterate is the fact that we purchased this property as principals. The property was on the open market. You could have purchased this multifamily property. And when it was sold, we put that property back on the open market, and it's another agent who represented the buyer. And the reality of this, in the end of the day, is there's really no sales comps to substantiate the value, because again, this is the highest price per unit ever to sell. It's all based upon the final product, the final rents, and the cash flow going forward for the new investor. So now we're going to look into the financials. What exactly did Chris and Deepan spend on this project? Was it worth our time, our money, our risk, and all the rest? Let's go there now. On my YouTube channel, I walk you through these projects. What are the specific capital improvements? What are millennials looking for? What are the color schemes? I walk you through all of it to assist you in that way. And if you've been watching my channel, I recorded 2 episodes for a property that I recently bought in Ontario, and I always promised to share the numbers, and then Chris got busy. So we're going to do that final episode right now. So Patrick, if you're ready, make sure you get my good side on the video. So here we go. So this is the property before. We bought this property March of 2022, my partner Deepan and I. This is what it looked like. We bought it for $1,750,000. Our loan amount is $1,137,000, which we still hold. Our down payment was $613,000. I had to compete just like you. It wasn't a listing or some inside deal. It was on the open market, on the MLS. The listing agent represented me when I purchased the property. This is now what we've turned the property into. We're actually just putting the final touches on the landscaping. So let's analyze, had I bought the building and done no capital improvements? Okay, let's say you don't buy the idea yet. Okay, so I buy and hold. Let's see what happens to my income. We purchased the property for $1,750,000. The gross income at the close of escrow was $98,100. Even if I raise the rents 10% per year, which we know is not going to happen, we know they're going to change the limits of rent control over time. Do you know that they're getting signatures right now for a new rent control initiative to go on the ballot in 2024? So we'll see you at the next luncheon. But even if I were to raise my rents 10%, or were to raise my rents 10% every year for the next coming 8 years, that would be a total gross income of $210,000. Here's what I did in a year. My gross income on that building is $199,000. I did that in 1 year, vacating the units and turning the units. So what did Chris spend on this project in terms of the improvements? Well, we bought some of the tenants out. Sometimes it's cheaper than to go the distance in eviction court. But some wanted to go the distance, and I said, you're so foolish. Don't you know my lawyer is Michael Brennan? But they still wanted to. They had to go. The unit remodels cost me $358,000 to renovate all 7. Landscaping, about $12,590. I'm all in, and improvements, $385,892. What's my net income currently on the rents? My monthly rental income from the 7 units is $16,085. This property is 6 2-bedrooms and 1 3-bedroom. My mortgage is $6,537. Water on average is $270 a month. Trash $215. Gardener $150. Taxes $1,600. Insurance $442. Repairs, I'm putting aside about $200 a month because I have done everything. Plumbing, electrical, bathroom, kitchens, flooring, roofs. I have done everything. They shouldn't call me for anything. Okay, let's say I just hold for cash flow. So I've renovated the property. Let's say I just hold. My net income is $80,000 annually. My total investment, my down payment, and my capital improvement money is $990. Call it $1 million. So my rate of return, cash on cash return, is 8% for a fully turnkey building. But let's say I fix and flip. The sales price would be $2,695,000. Well, Chris, how do you know that? Because I sell buildings for a living. But I priced it at 13.9 GRM. A building fully turnkey with that rental rate at 13.9 GRM, can't find it in the market. I'm confident in the value. Cap rate would be 5.37 for the new buyer. My net profit at a sales price of $2,695,000 after closing costs and all the rest would be $411,446. My total investment again is $998. So my rate of return is 41% return on my money. So right now my partner and I are kind of in between. Do we hold or do we sell? Now, with a fundamental understanding of pillar 2 growth, we probably will sell because I have a lot of equity in this property. I can take that equity out and now probably instead of owning a 7-unit property, go buy about a 12-unit property and go do it again. Well, hold on, not so quick. The figures have changed. The recording of that event was my last educational luncheon that I host for our clients and landlords here locally. That was recorded March of 2023. We are recording this video August of 2023. We've sold the property here in August of 2023. And what changed between March and August that I could not have anticipated in the world of real estate? Guess the number one thing that's changed? Interest rates. Interest rates went against me. So when you're analyzing a multifamily property and you're looking at the interest rate, for every 1% that interest rates increase, your cash flow can go down by as much as 15%. So just keep that in mind. We do not need interest rates to leap 5% for it somehow to significantly impact cash flow. For every 1% that interest rates increase, you can see a decrease in your net income by 15%. So between March of this year and August of this year, interest rates went up. So that changed the final sales price. We closed escrow on this price at $2,550,000. So that's a difference of what I was anticipating when I gave the facts and figures at the luncheon. So based upon that new price of $2,550,000, now of course we have the same amount of capital into the deal, which I mentioned was about $998,000. After closing costs and so forth, my profit, make sure I give you the right figures here, was $277,108. I initially anticipated something like close to 40% rate of return on our money, and then ended up being a 28% return on our money. Arguably not bad at all. How many of you would purchase, fix, and flip a multifamily property? How many of you would make any type of investment for a 28% rate of return? And that rate of return occurred over the course of, say, a year and a half. It was about a year and a half, start to finish, on the project. But I wanted to give you the reality because I didn't want to paint the picture on this channel that everything is hunky-dory in my transactions. Sometimes things happen that you can't anticipate. Sometimes markets change direction. But when I'm underwriting investments for myself, and this is something that I've tried to teach even my partners, is that, hey, when we're looking at what we call pro forma rents, market rental rates, let's be very conservative. The deal has to be a home run based upon conservative rents, because in the end, if we get rents that are above what we initially anticipated, guess what? That home run becomes a grand slam, to stay with the baseball analogy. So when we underwrote the property, I said, look, let's use X for our rental rates. And my partner said, well, no, I think we actually can get a different figure, a higher figure. I said, well, that's fine. And I hope so. But let's use these figures. Let's use these figures based upon an economy that's going through a tremendous amount of inflation, and there's pullback within the economy. We don't know that by the time we're done with the renovation, that rental rates haven't pulled back because tenants are struggling. So let's use these conservative figures. We ended up getting higher rents than we initially anticipated. And what I thought would be a 40%, say, rate of return on our money, which ended up being a 28% return, it would have been much worse if my math was wrong at the very beginning. So even in a worst case scenario where the market completely changed on a dime and changed directions against us, we still came out on top with a very handsome return. And then we'll look for the next property and go do it again. So I hope this video series has been informative. 3 videos in total, start to finish. I've outlined for you the project, the math, the financials, the improvements, the A to Z. I hope you can take this template, implement it. If you believe that it's a winning strategy, implement it within your own portfolio and that it serves you well. And we look to continue to be of assistance to landlords as you are building your financial legacy in multifamily properties. That legacy, again, is based on 3 pillars. Pillar 1 is maximization. Maximizing the properties you currently own so that you then can increase their value, essentially, to have that much more equity, to move into pillar 2, which is growth, typically buying and expanding the size of your portfolio through 1031 exchanges or cashing out and refinancing current properties to have capital to purchase additional units, and to then move on to pillar 3, which is preparing for tomorrow. And this property, step 1, purchase it, put it in pillar 1, maximization. We maximized total profits. Those rents, as of today, are at above market rent. We improved the property, other than maybe doing the asphalt. We did everything you could think of to that property to maximize its value so that we would extricate every dime of equity, potential equity. And that property, I'll mention it one more time, has sold for the highest price per unit for any product of its kind to sell in this particular city. That's a big deal, predicated on the right improvements, that in the end got us above market rents. So we took that property, we maximized it, we have now sold, extricated that equity, and we'll continue to grow, buy more projects, bigger projects, and keep the cycle turning. Now, we have more videos headed your way. I hope I have more videos about fix and flip projects, as I hope to purchase multifamily properties alongside you as you continue to build your portfolio. So stay tuned, subscribe to our channel, share this video series with other investors that you know. I believe it'll help them, especially here in California. I'm doing this today under the confines of rent control and all the new laws and regulations. This is real life investing of multifamily properties here locally. I believe it can serve landlords. Share this with your friends, family, other investors that you know. And be sure to turn on alerts so that you know when we release our next educational videos. We have plenty of content coming your way, and we look to serve in the sense of giving you the information, resources, and the network of professionals that will help you build your financial legacy in what? Multifamily properties. Chris German from the Apartment Dealer wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Till next time.